Welcome to the BX Podcast. I'm your host, Ryan Fowler, and we have another exceptional guest to share their insights and area of expertise with you on the show. Now, just before we jump into the episode, make sure you tap that follow or subscribe button on your favorite podcast app to get more BX Podcast episodes right there in your pocket. Now, if you would like to find out more about BX and attend a meeting either in person or online, head over to bxnetworking.com/locations. That's bxnetworking.com/locations.
Darren, an experienced entrepreneur and website developer with a keen interest in Web3, blockchain, and crypto, is a passionate Wealth 99 specialist. With over 3 decades of building successful businesses, Darren sees Wealth 99 as the perfect platform for individuals to safely and simply engage with the exciting world of crypto. Darren, welcome to the BX Podcast.
Always good to catch up with you, Ryan.
Now, a little background and context for the people listening. Darren and I have known each other for probably 3.5, almost 4 years now.
Yeah,
I actually met Darren
close
at my very first BX meeting, so that's putting a bit of a date stamp on it. So there's a little bit of history here that you'll hear come through, and we know each other fairly well at this stage. So get ready for an interesting and fun conversation, diving into this world of crypto. Now, Darren, you've been a web developer and done some incredible things in the digital space. Tell us about what got you into the crypto space and what makes it so fascinating for you.
Well, I got involved in the crypto space about 2016 when I was having a bit of a play around with an opportunity that had Bitcoin involved with it that ended up becoming a scam. And so I'm like, what's really this Bitcoin all about? So I started doing some investigations probably about May, June of 2016, started to get my head around that. I had an understanding of blockchain behind the scene, which is the technology that the Bitcoin runs on, and sort of got my head around it and went, okay, given it's got a finite amount of Bitcoin, or there's a finite amount of it, I thought, there's got to be something in this. So the last 7 years has been a bit of an interesting journey. But yeah, it was actually a scam that got me interested in crypto.
Wow. What made this scam? Like, what was this scam? What did you come across that was like, okay, this looks good, but what's going wrong here? What did this scam look like?
So it basically was utilizing Bitcoin to be able to get a return back. So what it was is that you would send it over a period of time, you get paid a percentage, but they had full control of your coin. So what I got out of that was that I need to have some sort of control over the investment or whatever you were putting some funds in to gain a return. That's what I got out of that. So that's what got my interest in looking into crypto further, use cases, and lots of other things. Yeah.
Right,
the lesson out of that was don't give your money to someone else, and expect it all to come back. Or any.
Yeah. That's definitely a scam for sure. So you've seen the scam, you've come across it. Did you actually invest in it? Did you hand money over to
a
it?
little bit, couple $100, but more.
So it wasn't a big loss
money back.
in the grand scheme of things.
No, I got my money back, but there was lots of people I knew who didn't. Yeah.
And is this type of a scam something that's fairly common within the crypto space?
I think it's across the world in the investment space. So they're just using crypto as the currency to do it in now. So you see it across the world in Australian dollars, US dollars, but Bitcoin is a big one now because they think it's untraceable when really it is. It's fully transparent.
Well, that's the whole point of the blockchain,
If
right?
anything, That's the whole point of blockchain. You got it. Ryan's done his homework here.
It's because I've known you for so long, Darren.
Yeah, they think they're getting away with it, but they're not. So, but it's just the currency that they're using. A lot of them were using another one called Monero, which was secured and encrypted, so you couldn't really tell, who owned it or the coin itself. A lot of the scammers were using that. But I think a lot of scams are purported in the crypto space. I think in September this year, so we're in 23, if you're listening to this sometime in the future, when we've recorded this in 23. And September of 23, there was over $1 billion of scams in and around the crypto space just in Australia in September of 2023. So lots of people are falling to them, utilising that. Yeah, it is. So there's a lot of learning there so that doesn't happen to you.
So what makes this crypto space so confusing that people fall for these scams?
Well, they don't understand it because there's a couple of things. Because it's digital, it's a bit different. If I could pull out my wallet right now, visually imagining I'm pulling out my wallet out of my pocket and I'm pulling out a $50 note, you can see it. You store it in your wallet or wherever it was. It's visibly seen. But the problem with a digital currency, it's like, so where do you store it? There's a few ways to store it. You can store it on like a little USB stick. So I think everyone's seen the little portable USB sticks where you store data. Say you're storing it on one of them. Or you might store it on an exchange where you buy it. But what happens if you lose it? That's probably the biggest challenge. Actually, I was with you one night earlier this year in 23 when we were up in Brisbane, and was talking to an accountant lady who was dealing with a client there in their 60s, and their son had died in his late 20s, and he had a USB stick and it had a stack of Bitcoin on it that he bought in 2011, and he died and they can't find the stick and it's got millions of dollars on it. So it's like, where do you store it?
I remember that story so well.
Yeah. But that's the thing. People don't understand it. It's like, okay, where do I put it? Do I just put it on a stick? Can I store it on my phone? And like, what happens? A lot of people don't understand it. So it's
and
it's
that's
like
something
a digital
that
wallet versus having a physical wallet.
Yeah, and it's something I'd like to demystify in just a moment for the people listening. But to help the listeners really understand your depth of knowledge and experience in this space, can you elaborate a little bit more on your web development side? Because you've briefly touched on this, but I know that you've got so much experience in that area, and I know that you're an expert in that space, and you really understand this blockchain Web3 development side of things. Can you elaborate on that a bit more and what your history in Barana is?
Sure. So I started in 2007 in digital marketing, so it's like 16 years ago, building websites, then moved into sort of custom software development. In the last 10 years, been building web apps, web applications, custom software, and using the blockchain, which all really is a more secure database to be able to, solve problems. So I've been doing that for 16 years now. Well, so it feels like it was yesterday. Where's time gone? And I guess it's the digital space, more the technology, the blockchain, I think, and there was a word that you will hear a lot in the next decade if you're listening to this, and that's the word tokenization. And really that is being able to have a secure database and being able to tokenize things. So put it into some context for you. So imagine if you had a share that you bought a Commonwealth Bank share. So that is as a share, it's like you get a physical piece of paper for that share. But imagine that share now being called a token and been stored on the blockchain. So now it's available, it's easy to be able to use, store it, send it to somebody, easy for clearing. So tokenization is just going to help take assets, make them easier to be able to buy, sell, store for the future. That's probably the big word out of this, utilizing blockchains. Yeah.
And so with that, I'd like to bring us back to where we were just a minute ago, and understanding this system of storage and wallets and the different elements that make up, keeping these digital assets, crypto, tokenization, tokens, whatever we're buying in this digital space, actually safe and available for us.
Yeah. Yeah, let's just talk about, there's 3 ways to store, and then let's talk a little bit about security of them. So one of them I alluded to, which was having a little USB stick, which is like a little personal device where you can have a digital wallet on that little portable device and store your crypto there. I'm holding up my phone right now to show Ryan, because I know you can't see the phone listening to this, but on your phone there is a digital wallet. There it is on your phone that you can store them. Then there is like an exchange. So a lot of people might have heard of a company, the largest crypto provider in the world, to be a place to buy from an exchange is called Binance. So you can buy it from an exchange and store it on an exchange. But none of those really have any kinds of protection. So if the stick, the little USB, if that breaks or you lose your password, you've lost your asset. If you're on an exchange and they go broke, well, you lose your asset. There's nowhere that you really have any form of real safety, I believe. So if you're buying digital assets like crypto for your self-managed super fund or future investment towards your retirement, really need to look at a way of how you can make sure your assets are safe. And there's only one way to do that, and that's the way the institutions do it, and that's called third-party independent custody. So a company like vaults those coins for you, or the platform has that service built in, and then it's like you get a full insurance service with that. So if something happens to the exchange or something happens to the asset, you know that you've got, just like you buy a house. You go buy a house, what's the first thing you're going to do on it? Put insurance. So it's the same sort of thing. And I believe if you're going to buy, that's the best way to do it. And then from a security perspective, it's really important that wherever you buy it, that you can't withdraw it off the platform that you're buying it from. Why is that important? Because if you go buy it on an exchange, this is where a number of scams I've seen this year happen with, say your example, let's just do an example with you and I, Ryan. So I help you, I'm the scammer, and I'm going to help you to buy some crypto, and I'm going to help you set up your Binance account, for example. You send your money from, say, NAB or Commonwealth Bank or wherever to Binance, you buy the Bitcoin. And then me as a scammer, I'm going to help you, because I want to help you get it off Binance onto a little personal wallet on a little USB stick or a wallet on your computer. So then I'm going to help you set up that wallet. And then what happens is the scammer then gets access to, there's some words which you use to recreate your wallet. So it's usually 12 or 24 words. And they'll get a copy of those so that you think they're doing the right thing by you to, safe and secure. But they've now got those words, they recreate the wallet, and they steal your money. So that's probably the biggest thing that happens. So where you buy it, you want to make sure that you can't really withdraw off of where you're buying it. So you want to buy it on a wealth exchange, and there's very few of those. So from a security perspective, because then the only way that you could, on a secure exchange like that, doesn't matter if someone hacks your account, because the only way that anything that they could do is create a capital gains tax event or send the money to your bank account. That's about it. So just security is a really big thing that you need to take into account with digital assets. I know it's a roundabout way of answering 2 questions in one.
Yeah, there's so much there, and and the process, it seems really confusing, and the closest thing that I can relate it to is storing in this third-party independent storage platform. I can't remember the exact phrase you used, this wallet.
Yeah,
is similar to a chess setup in purchasing shares. So you mentioned shares before. In sort of that in independent investment space, that's chess is you holding them yourself and nobody else having access. To me, this third-party independent wallet is following that same vein of storage. Would I be correct in thinking along those lines?
Yeah, it is. I think that's a really important factor, is to have that security, and also what's happening right now is a lot of people are cashed up in their self-managed super funds, and they're taking percentages, and they want to go buy digital assets. But there's a lot of rules and regulations to follow. So looking for a place that has that third-party independent custody, then that solves the problem that, like, your self-managed, if you've got a self-managed super fund, you're listening to this, your self-managed super fund auditor is going to want to know where the asset is, and the third-party independent custody, really helps you audit it to make it easy, and will keep your accounting costs really low, because then their auditing process is simple and easy.
And while we're on this vein, how does it come to reporting? Especially if, for an experienced investor who might have been in for a long time, have some properties, some shares, the general diversified portfolio. What's it like in this reporting process? Is it completely different? Is it completely complicated? Like, demystify this for us.
Well, it can be. A lot of accountants and financial planners don't really like digital assets. A lot of the platforms don't have the appropriate reporting, and I've seen some people get lumped with bills in the tens of thousands of dollars just for accounting associated with crypto or digital assets. So finding a platform that's nice and simple and easy. And if you're buying it in a self-managed super fund, well, then you have a different set of rules and regulations that have just come in starting on the 1st of July this year in 2023, where you now have to report the balance of your super funds every quarter now. So having a platform that provides the balance at the date of 30th of September or 31st of December or 31st of March and 30th of June, and being able to get those balances in to do your reporting is really important, and not a lot do that. So
So when it comes to reporting, what are the types of things that we're looking for to simplify this process so that accountants are actually happy to work with digital assets?
Yeah. So they want to know the date and time and the dollar value that you paid for the asset. So let's put it in simple terms. You bought Bitcoin on the 1st of June of 2020, and you paid $200 for it, for a Bitcoin. And on the 1st of June 2023, you sold that Bitcoin for $1,200. You've now made $1,000 profit. So they want to know what you bought it for, what you sold it for, and what your capital gain is. And then depending on if you've held it more than a year, then obviously you get 50% capital gains tax free, unless it's in your self-managed super fund, and it's a different set of rules. And then the other 50% you get for free, and the other 50% you have to pay tax on at whatever your nominated tax rate is, whether it's a company, trust, individual. Yeah.
Right. Okay. That's good to know.
Yeah. So it's like a physical asset.
Just the simplified
just like
version.
a real estate. Yeah. Yeah, it's like real estate. Yeah, it's no different. Whatever you bought it for, whatever you sold it for, the capital gain works out how long you've had it.
Yeah.
More than a year, get half of capital gains tax free, pay tax on the rest. Same thing. It's just treated like
tax planning
similar.
wise, it's pretty much the same. But mindset wise, there is a difference between owning physical assets versus digital. What do we have to kind of look at and go, okay, I'm looking at one here, I've got this and the other. What is that mindset shift like?
Okay, so if you're buying a physical asset like a house, so let's just do a house and crypto, right? First up, from a mindset, that your property, if you bought a good property in the right location over a 10-year period, and I'm not giving financial advice when I say this, but they say, that it usually doubles in price if you bought the right place, the right location over a 10 or 11-year period. Crypto works off a totally different set of parameters. They run off a 4-year cycle instead of a 10-year cycle. Property, that if it goes up or down, it goes up or down quite slowly. You might, if property does go down, what happened in the last cycle? Maybe it went down 20 or 25%. It went down in one hit, and everyone thought the sky had fallen. So it's quite predictable, and it does that doubling every 10 years. Whereas crypto, you have to have a totally different mindset. People look at it as speculative, so therefore they want to buy and sell really quickly because they get scared, because crypto for example, Bitcoin, could go up or down 10 or 20 or 30% in one day or 1 week. It goes up and down, and people think, what the hell's going on with this? But when they understand the cycles of Bitcoin or crypto, I've just talked Bitcoin as a part of the cycle, over a 4-year time period, Bitcoin would go up 300% over a 4-year period. This has been happened in the past, so this is not, may not do the same in the future, but the last 3 cycles of 4 years have gone up at least 300% from the top of the last 4-year cycle to the top of the next 4-year cycle. As an example, the last cycle went from about 27,000 Australian dollars to 81,000 Australian dollars. So it's about 300%. The cycle before that went up about 900%. The cycle before that went up way more than that. So it's been averaged over the last 3 cycles about 300%. But over that 4-year cycle, it could go up over a period of 9 to 15 months. That could triple or quadruple over that period. Next thing you know, it just comes down just as fast. So over the cycle, it might have 1 year up, 3 years down or sideways and up. So, if you're looking at a mountain range, it's like Mount Everest in the middle somewhere over a 4-year period. And the rest of it, you just go, wow, what's happened? I've fallen off a cliff. So it can be quite heartbreaking if you don't understand that the cycles, have time periods for it. And you have to look at it over a cycle versus going, hang on, I've got in today and I've bought at the wrong time in the cycle. And I need to, hang on to it, to go through the next cycle. So it's really getting to understand that cryptos run in different cycles. It's like starting a new game. When you start a new game, let's just put it back to sport. If you go start a new game, what's the first thing you do? You want to learn the rules. What's the rules of this game so I can, get good at this game? Crypto is the same thing. It's a new game. You got to learn the rules. When you learn the rules, you can master the game. When you can master the game, you can put it to your advantage. And there's some great reward in there for you if you know and master the game.
And so there's a lot of this fluctuation. You mentioned the cycles, how over the last few cycles it's gone up about 300% on average. What then does that, how then does that play into people's risk factors if there's going to be a lot of ups and downs and Mount Everest to the, the trench at the bottom of the ocean? Like how much of a risk profile factor do people have to kind of step into this knowing that there's cycles and have confidence and trust the process?
Well, a lot of the problems in the past, and that's why I think digital assets have been given a bad name, is people have taken to it like gambling. Just go in there, go whole hog, don't know what they're doing, and put a lot of risk. And then when they don't understand the cycles, they're buying at the top of the cycle. And the next thing you know, 3 months later, their account's gone from 100% down to 10%, and they wonder where all their money's gone because they haven't understood it. So I truly believe to invest in digital assets, you really need to have a plan. You need to educate yourself on the cycle and where you are in the cycle, and need to really educate yourself before you go do something with it, and then put a plan in place and look at it over at least a 4 to 8 year period or longer. The longer you can leave it in the market, the better. Don't look at it as a gamble, and look at it in percentages. No different than if you were to, do some investment into any asset strategy. You'll go, right, I've got, different percentage of my assets into different categories. So it's just being sensible, I think. Sensible and educated are probably the two things that you need to do if you haven't started in this space before. And then find someone, and probably the fastest way to learn is to find a mentor, someone who's done it before, who can help educate you and answer the questions and help you get to the other side faster.
Right. Okay. That the mentorship, I think, is valuable and important, especially through this kind of period. There's one more thing I'd like to touch on and bring you back to before we wrap up, is this idea of tokenization. Now, you've mentioned this in a few different areas, but in the continued development of technology, I'm curious to know what may be happening for the future of traditional assets, being property, being shares, being term deposits, being bonds, whatever it might be. Does tokenization play a role in that investment strategy too?
Absolutely. So the Australian government has done a whole heap of research. They engaged a group called the Australia's Digital Finance Cooperative Research Council, and they spent $180 million doing some research towards 2030. And 2023, the big market has been, everyone's talking about AI. AI this, AI this, AI this. Everything's AI as far as technology goes. They say AI is a $2 trillion industry before 2030. They're saying tokenization is a $32 trillion industry before 2030, 16 times. So imagine, instead of having to, you'll have shares, bonds, real estate, everything will be on a blockchain of some kind. You'll be able to get access to assets that only the 1% wealthy have ever been able to get access to. And you'll be able to log into a portfolio and get access to these assets and be able to get investment opportunities that have only been available to the 1% and now available to the 99%, thanks to the blockchain. So where it's heading is extremely exciting. The next 2 or 3 years, instead of buying your shares, you'll be buying tokens on the ASX, on all the different share markets around the world. Same with your bonds; they'll be all registered on stock market. Will be all on blockchains. Even property, to the point where you could purchase a property. Obviously, the government will have to get all their registers together for their property deeds and titles. But you could literally have a QR code on a house, already have your finance done, and everything could be done just through clicking a QR code, and all done on a blockchain without the need for all the other people and intermediaries in between, which is what the blockchain does. It just allows two people to transact without having a middleman. It's the software that sits in the middle that allows you to do that. And that's the technology that's really going to help change the world over the next decade. Exciting times.
It's going to be a very fascinating transition. Now, through all of this transition, there's a lot of different tools and things that we need to be able to work with and understand more. Can you tell us a bit more about Wealth 99, where that comes into play, and where people can find out a bit more?
Absolutely. So Wealth 99 is really a platform for people to be able to buy and store crypto in a safe way. So only look at investable cryptos, tokenized precious metals, and there's some other assets that are coming in the future. But it's really set up for wealth. It's not set up for trading. So people that want to look at their future as far as self-managed super funds and trusts and things like that go, to be able to invest safely and have all the auditing and have all the protection in place. That platform is set up for that. If you want to find out some more information about Wealth 99, just go to wealth99.com and there's some information. If you go to the Contact Us page there's a section on specialists and you'll find me there if you want some more information on myself. And we're really there to be able to help. We're not only in Australia, so we've set up in the UK as well and a number of other countries. We've got over 20,000 clients now in multiple countries. And we're really here. I truly believe we've got a platform that's ahead of its time, a long way ahead of its time. And with the rules that are changing in the UK next year, I think Wealth 99 is really going to be that foundation partner in Australia that's going to help take the investable crypto and digital asset space by storm. And people will be looking at us because we're ahead of the market. So I'd like to think that we do a couple of things different. You actually get personal service when you come to us. There's no other exchange in Australia that you can literally ring someone and get some questions answered. It's the most terrible customer service you've ever seen in the world, crypto industry, in getting customer service. So we have people who have knowledge and you can actually call. Security is really high, which is important, and that auditability for when it comes to tax, because the tax man really wants to get their hands on their slice of the pie too. And we've got it there to make it really simple and easy.
Excellent. And I feel like that's going to be a platform that's going to kind of pioneer certain parts of this in Australia, especially with people like yourself. And I know a few others that are working with Wealth 99 that seems like it's really got that strong advocacy behind it from good people, which is nice to see. So We're going to actually put links to that in the show notes down below as well, so that you can find this if you're listening. You can head on over and also book a call with Darren if you wanted to find out a bit more. But Darren, thank you so much for being a guest on the BX podcast. It's been a pleasure to have this conversation with you, and certainly given me a lot more clarity around crypto tokenization, the blockchain, and all the other elements that are going to be playing a big role in our future.
Thanks, Ryan. Always a pleasure. Great to spend a little bit of time with you. As always, all the best for the festive season, my friend.
That wraps it up for today's episode of the BX podcast. You can get more of the show by simply tapping the follow or subscribe button on your favourite podcast app. To join us at a live and in-person or online event, head over to bxnetworking.com/locations. That's bxnetworking.com/locations to find a meeting near you. We look forward to talking to you next time on the BX podcast.